I'm here to give a short overview of SKAGEN Kon-Tiki in February. The fund had a good month in both absolute and relative terms, increasing by 3% during the month, which was slightly ahead of its benchmark over the same period. One new company was added to the portfolio during February, and one was removed during the month. The Kon-Tiki portfolio remains attractively valued on both an absolute and relative basis and trades at a significant discount to the benchmark. We believe there to be 40% upside for the top 12 holdings, which represent 40% of the fund. SKAGEN Kon-Tiki is up 4% year to date, which is ahead of its benchmark. Looking longer term, it has beaten the index in 10 out of 11 calendar years and delivered annualized returns of over 17% since inception in 2002, which is 8% ahead of the benchmark index. Looking at the drivers of performance year to date, the Chinese car producer Great Wall Motor has been the best performer. It recently announced very strong January sales, up nearly 90% on the previous year. The second best contributor was the Brazilian producer of sugar and ethanol, SKAGEN Limited. The company reported strong third quarter results with an increase in both sales and margins. We still see further upside in the share price as we think the margins are sustainable and there are additional short-term catalysts such as an increase in gas prices. On the negative side, State Bank of India has been the biggest drag on performance year to date. It recently announced third quarter results below consensus, mainly due to deteriorating asset quality. An improvement in this remains a key catalyst for the share price, and a reduction in non-performing loans coupled with an increase in economic activity would provide a good basis for a re-rating of the company. There was one new entrant to the portfolio in February. We bought into the Russian pharmaceutical company Pharm Standard, as we think it is well positioned to benefit from a rise in private and public expenditure on pharmaceuticals in Russia. The authorities have increased their focus on the pharma market and put in place initiatives to encourage domestic production, and we believe Pharm Standard could be a beneficiary. The company is also the partner of choice for multinational companies for manufacturing and distribution in Russia. We sold out the remainder of our stake in Seadrill, which has been a fantastic investment for SKAGEN Kon-Tiki over the last 7 years. The share price is now quite expensive compared to peers, and we see better value elsewhere. In summary, it's been a good start to the year, and looking ahead, we believe the SKAGEN Kon-Tiki portfolio is attractively positioned with considerable upside potential. For more information, please visit the SKAGEN website.